So, g'day, mate. Shall I throw a pip on the barbie for you? Good morning. Today is April 6th, 2015, 7:32 in the morning, New York time, London lunch. This is your daily Forex trading strategy session. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com, an ECN where clients get to enjoy Forex trading oil and gold, stock indices from all around the world, and of course, binary options for scalping and hedging and whatever you want. Today is a Monday, so I'd like to plan out the trading week. So today I propose that we go through the Commitment of Traders report released by the Commodities Futures Trading Commission on Friday, which reports on large speculative positions, non-hedging, that are in the marketplace. It's not opinion, it's not sentiment of hedge funds, it's large positions, it's money in the market. And then I also propose we go through the calendar and look at the important event risks and opportunities of the week. And then if there is time left over, we can do some technical analysis. Maybe set up some swing trades. Does that sound good to you? Makes me feel a little fuzzy inside. Now remember, investing and trading is risky. In particular with leverage, it makes it very risky and not appropriate for everyone. Your past performance, however, good or bad, never predicts future results. My opinion, you should always stay small and humble, focus on the long term, and never risk money you cannot afford to lose. All right, so this is where we left the market on non-farm payrolls. Did anyone attend my non-farm payrolls event at FX Street on Friday? It was the 107th month in a row that I've done non-farm payrolls live. Potential entry is in here, and then these black dots are parabolic stop and reverse, and we had this big long discussion on how to use volatility as your guide for exit, not price. Ken was there, Marina was there, yep. Right on, guys, thank you. Oh, sorry. There we go. Sorry, entry here. And the discussion at that time, I think there was 750 people registered for that event. The discussion at that time was people kept asking, well, what price do I get out? What price do I get out? I said, what's price got to do with it? Right? So, one way you can get out is based on volatility because you want to let the winners run. Why are you so eager to get out, right? So we had this discussion on using parabolic stop and reverse, which is a suggested guide of stop placement based on volatility. So the idea here is if the market is volatile and moving in your direction, you want to give price as much room to breathe and let the trade run. So if there's lots of volatility, like these huge big candles, PSAR, as you can see down in here, basically it doesn't move your stop at all. Look, it's up 100 pips and it doesn't even move your stop to break even. Just nothing. For 4 hours, it said don't do anything with your stop. Isn't that amazing? And then look what happened after we stopped making higher highs. Lock in profit, lock in profit, lock in profit, lock in profit. So anyways, so the entry was here, and we're now here. The PSAR is still keeping you in the trade, but look at that, 99% of the move is now locked in as profit. At the end of the hour, it'll print a new dot, and you'll just move your stop like there. And so it'll keep you in the trade until volatility is such that basically price is going against you. And what will happen is PSAR will suddenly appear above the chart, and that means it's assuming you're short. Well, if you're long, obviously that's going to offset your position, right? So I just want to follow up with that idea and that trading. What do you think of PSAR? Parabolic stop and reverse. It's not always used that way. There's a lot of buy and sell on flips of the PSAR, but that's like people that trade every moving average cross. One cross means down, one means up, one means down, and they're all over the place, right? Ideally, you already have a bias set, and you're using it ahead of time. Like let's say you're waiting to short, and PSAR rising. PSAR puts you short right in here, and then. So I guess what I'm saying is you've already made your fundamental or long-term technical decision on direction. You don't need PSAR for that. And you're not using PSAR to get into a trade because you use it as a stop tool. So you might be, let's say you trade that. Well, PSAR still has you here. So what are you going to do? Wait for PSAR to flip? No, you've made your decisions on strategy and then your tactics for entry and all that. You've already made that using other analysis, and then later on you can use PSAR as a guide if you want to use volatility to take you out of the trade, not just some random price. All right. All right. So what would you like to do first? A trader's report or the news event calendar? This is democratic here. As long as I don't disagree with you, it's a democracy. Commitment of traders. Nice. Okay, you're the boss. So again, these are positions so large, the government requires them to be reported. I think that's interesting, isn't it? Okay, this is the for the euro. Of course, these are futures contracts priced in dollars. So everything's going to be like this is euro in dollars, so on and so forth. The gray line is traders in long positions, not wanting to long, thinking about going long, or throwing down working orders to try to entice the market to move in a particular direction. Like a high frequency trader or something, throwing down fake orders. What is it? Oh, that's actual money. So over the course of the last, 1, 2, 3, 4 weeks, have traders added to long positions or reduced their long positions in euro? Does that mean they're shorting? No, it just means those that were long, there's just less of a bullish community. And then what about here? These now represent the bears. So let's look at the bears over that same time period of 4 weeks or so. 1, 2, 3, 4. So we'll use 5 weeks just because it's there. So what's happened over the last 5 weeks? Those are the short positions. Well, generally, more people or more market participants have shorted, and then just over the last week or so, there's been a bit of a pause on the short, right? But are they longing? I mean, this is the most important thing. There's a little bit less short positions week over week in volume, but did they go long? Is it a potential change in direction, or is it a potential change in sentiment? What do you think, guys? No, there's less people short. Well, I guess Ken's saying over that entire period, yeah. But let's just say week over week. There's significantly less people long and slightly less people short. Seems like just a lot of offsetting going into the NFP week, right? Because remember, this data is a little old, right? So anyways, I think that's interesting. So should I stop being a bear on the euro? Yeah, Gregor says, let's see next week. Well, that's what we always say, right? But right out, just based on what we know, because everybody has this information, nobody has the other information, right? So this just begs the question. We've been a bear on this for a while. Should we stop being a bear? Not according to this. Yeah, and this is kind of what we said at NFP, right? It went up. Euro dollar went up. Does that mean I want to buy it? No. What does it mean? I'm going to find 3 different levels where I want to sell it again. So that's that. And of course, look at price at that period. Euro dollar went up and down. Amazing. New York Community Bank. Alrighty then. How about the pig? The Great British Pig. All right. So we're going to look at longs. What's the trend, recent trend in long positions? We were watching this area for quite some time, a couple of months, as a potential buildup around the 150 level for possible bouncy, up, 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 up. And then it collapsed on us. In 2 weeks, we're going to get a IMF report. And maybe they'll change this. They'll change their tone. Who knows? Maybe the IMF will come out and say, hey, the UK economy is doing good. It's just being suppressed by low oil prices. That's why they don't have inflation, headline inflation, right? But maybe the IMF will say things like, we see inflation at the wage level, job growth is good, blah, 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 and which would be interpreted that Carney is not going to keep interest rates super low and quantitative easing and all these things, and that they'll have to have a change in policy sooner than later. And that would just be boom time for the British pound. Policy. If they're going to start to normalize, well, other central banks, let's say like, I don't know, Australia, tomorrow decides to cut interest rates, and let's say England is thinking about maybe raising interest rates. So one would think money leaves Australia and maybe goes to a bank account in London. Okay. So anyways, interesting. We've lost some bullishness there. What about the bears, eh? The bulls, the bears. Okay, shorties. Less people short, people long. Wow, what? The net result, flat. So, neutral on the pig. Or if you're aggressive, like we were doing before, just sort of buy the dips, keep your stop close, jam your stop at -1 and let it run. Something like that. And just, if you get knocked out, don't worry about it. Right? I tend to focus on shorter term trends going into, or shorter term trades going into the summer months. So maybe just lots of little shots like that. Seems weird, right? First week of April, April 6th. But I'm already thinking summer. So let's talk about that for 2 seconds here. We have April, May, June, and then holidays. April being the first month of the quarter, we're going to have earnings season. So we got to go through that for the next few weeks. And then we got to get some trades on and make some money before we go into the summer lull, right? So the next 12 weeks are super important. So it's moveon.com. Oh, where did where'd it go? There it is. Okay, so that's the pig. Yen yen. Okay. A few people have been buying the Japanese yen as of late. Do you think that's the slow repatriation? Just a slow and steady demand for yen? That maybe that trend is over? Yeah, Greg. Greg asks, do you trade during the summertime? Yeah, it's just different, right? You have to adjust your expectations, your strategies and tactics to fit the market conditions. But there are some summer months that have been perfectly fine. And then in particular, August, I'm setting up, much bigger trades. So August can be quiet. If you look at the stats, it'll say August is one of the most quiet months there is in trading, except I'm working and I'm building positions. Yeah. But, you could probably take vacation from the July 4th holiday, come back August 15th. Maybe even June 15th to August 15th. You could take off if you wanted to. Maybe take your trading rig to your beach house and just tinker around and swing trade. You could. All right, so anyways, yen yen, it's been slightly strong from the beginning of the year to now. Slightly strong. That may be the natural repatriation. As everybody knows here, April 1st was the new fiscal year for Japanese businesses. So any money that would be repatriated back to Japan for whatever fiscal need would be over. And who knows, maybe this starts to weaken again. Cool. Okay. So all of this was expected and seems pretty normal, nice and slow and steady, and a little bit of a spike, in the last couple of weeks before the fiscal year end. So that's cool. Okay. How about the short positions? Whoa, 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 whoa. So long and steady growth in long positions, and then wow, big collapse in the short positions. Maybe, again, maybe somehow related to this. Could be a rabbit, could be. Okay. So that's interesting. We're going to have to overlap some technicals, right? This is not going to put us into a trade. But I'd like to see both of these things reverse in the next few weeks. So next week, when we look commitment of traders report, I'd kind of like to see this one pop up, and I'd like to see this one dramatically drop down. Are we going to have that now? Well, of course not, because here's what it looked like for non-farm payrolls, right? Here's what the USD yen did. Right? So, well, yen relative to the US dollar, which is this red line, looks like this right now. So all of that's not going in the right direction, but that's fine for me. It's our job to pick the place for battle. We happen to be on 118 right now, right? Or is it 119? 119? Interesting. So all that looks good and logical. I'm going to skip Swissy. We'll go to the Aussie. All right, so we talked about it briefly here, and we're going to talk about it again, but RBA needs to make a decision this week. Obviously, that's going to be things here, the value of the Aussie dollar. Governor Stevens, I don't know, what, 6 months ago? 5 months ago, said the value of the Aussie dollar versus US dollar was 75. At that point, we were at 86, right? Right now, going into the RBA meeting within 24 hours, we're at 75 and some change, but I'm looking at an hourly chart, and the lowest low I see on there is about 75.50. And that's exactly normal. I think I even talked about that at NFP, where I was telling people very often it doesn't touch the 75. What happens is people get to, or some shorter term traders, let's say, hedge funds that want to try to, spook people out of their positions, stop hunt and stuff. What they'll do is say, all right, the value of the Aussie is 75, and it's kind of like a line in the sand. So when you get down to close to it, like 75.50, the way that some market participants look at it is there's a 50 pip potential downside and an unlimited upside, right? And a lot of traders, they're going to think, are going to get psychologically weak around the psychological level, the 75 that everybody knows about and everyone's trading towards. So they start to think, hey, if we can entice those guys to take their profit a bit early, because think about it, some of these traders might be 800 pips up. What do they care about 50 pips, right? So all you have to do is entice them. So you long around 75.50, start taking out some of these stops, which starts a cascading effect, which starts a herd stampede to get out, and they could pick up 300-400 pips and really only risk 50 to the downside, right? So, and who knows, maybe some of that's happened. Don't really know. But tomorrow they're going to make it. There's going to be a rate decision, and there's going to be a statement. And of course, the big question is, what does Governor Stevens say? Does he say the Aussie dollar is worth 65, and this drops another 1,000 pips? Sounds funny, right? A lot of people are just not used to hearing stuff like that, right? That, oh yeah, a drop another 1,000 pips. 1,000 pips. I'm happy when I get 22 pips, right? Yeah, 1,000 pips, but he started this journey at close to 95. He said it was worth 85. He got to 85, and then he said it was 75, and now we're at 75. He could come out and say it's 65 and cut another 0.25%, which is already at the all-time low. He can cut another 25%, and boom, go to 65. Totally could happen. Okay, so that'll be interesting. I suggest maybe you pay attention, maybe hang around for that RBA statement. Right? Some guys will say, oh, well, Wayne, that's 2:30 in the morning in London. I couldn't possibly get up at 2:30 in the morning to trade an RBA decision. Like, really? Because I think I'm at the pub on Saturday at 2:30 in the morning, and that was okay. So I think you can man up. For the Queen, at least for the Queen. Right? She has a job, too. She has to clean and vacuum. All right. So what's going on here? Drop in the price with Aussie. Boop, 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 boop. Long positions, slightly. Short positions, kinda. But, we're near that 75, and people don't really want to trade that much, like I said. So, if like I said, so if there's nowhere to go, like if right now people think you can't go below 75, then the only thing you can do is head up, right? So I don't know. Let's hear what the RBA says. And this, like I said, this could be, this go back to 80. Or in the statement, they say something that says, we're going to, how about this? If they cut interest rates at 2.0, I mean, goodbye, Aussie dollar. Okay. Goodbye. Goodbye. How about the Kiwi? I'm thinking Kiwi's pretty nice. Check that out. Holy smokes, eh? What does that show you? Unbelievable increase in long positions and a crash in short positions. So what we've been watching is a fall in short positions, a fall in long positions, and the market just going sort of neutral. Okay? Well, now we have this, boom. Still less people short and significantly more people long. And for the first time in a long time, above the zero line. Wow. What? What does that mean? The market is net long. It's a bull market, my friend. Perfect, isn't it? Isn't this what we want? Anybody find that like awesome? Anybody? Picking up a 3% yield? Like, let's say you had to sit down and talk to investors about your fund. Is this something that you might want to talk about? That you've been analyzing the large speculative positions in the marketplace and that there's been a significant change from the market being net short to net long, and it's just occurred week over week? And that there's a divergence in policy and blah, 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 blah. Whatever. Yeah? I mean, it's good, right? Did you guys already have this information? Like you already knew this, you already did this yourself? You're like, yeah, I already knew that. Everybody knows that. Well, good, Denise. Good, Alan. Yeah, YJ? Good. Very good. Very good. Very nice change. It's been, I don't know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34. It's been 34 weeks going from, in the bear back into bullish. Right? Look at that. Over 6 months we've waited for this. Yeah. Hoo-ha! Now, if we can only get the yen to, cooperate, you got ourselves a nice little carry trade. Very nice. Okay. What's going on with Kitty Cat? Significantly less people short. Nobody longing. Going neutral. All right. We have it trapped in a technical range. And as far as fundamental prices are concerned, when you think of commodity prices, last week we reviewed the CRB index, for example. So hopefully you're putting that into your routine. Many believe that commodity prices will remain low for quite some time, so that's not going to be good for a commodity economy like the Canadian economy is. But on the flip side of that, its largest trading partner, the United States, is doing quite well and is presumed to continue to do quite well. And that should be positive. Also, a weaker Canadian dollar would be great for Canadian companies selling stuff to America because the US dollar will buy more Canadian goods, or another way to say it, Canadian goods will be more affordable to Americans. So they're going to want to like buy more or whatever, right? So that should be good. It should balance, I guess. So what I'm hoping to see, and hope's not a strategy, but I'm hoping to see maybe a stabilization in the USD CAD. I don't think you're going to see much of a recovery, but on times when the US dollar's going to be weak, let's say over a 2 or 3 week period, the US dollar is taking a breather, the Canadian dollar might be interesting to trade, and then when and then you might want to watch oil prices and do that, right? So when oil prices fall, maybe the Canadian dollar falls. But I don't know. I think we may be trapped in somewhat of a range for a while. And I think what we need to do is maybe buy the Canadian dollar next year, right? Maybe next year. And I'm not going to get into it now because it's a long discussion, and we have more work to do yet. But if you know me for a while, then I'll give you a hint, and you'll probably know the whole speech. It has to do with the trickle-down economics of the ECB's quantitative easing program. That is what Canada needs. Easy, right? All right, here we go. Let's do the calendar. Okay. Speaking about Canada, IVPMI coming out. That's a nice one to trade for the Canadian dollar. It really is. So if you're thinking about trading the news or scalping the news today, Kitty CAD should be a nice one. In particular, there was a bad miss. You don't want to be below 50. 50 is contraction. So like, it's not just 49.7. It's the fact that it's below 50. Bad. You just you can hit 50.1. That's fine. 49.9 freak out time. Okay. So what you can see there's a forecast here of 51. All right. So if we blast back above 50, that should be really good for the Canadian dollar, because there's Canadians like chewing on their fingernails right now, all nervous about 2 months in a row under 50. That'd be bad, very bad. So that'll be interesting. So if it does come out 48, the Canadian dollar is just going to tank, because A, it's a miss, and B, it's clearly below 50, and the below 50 part's much more important. So that'd be a double whammy. So one way or the other, if they get the 51, it's going to be a breath of fresh air. You can relax almost, and the Canadian dollar should benefit on the short term. So just take a look at that. And here's what I would do if I were me. I would set up two scenarios. I would have a currency that I want to buy if the if the IVPMI comes out 49, 48, whatever, right? And it's a big miss and the Canadian dollar's weak. What are you going to buy? What currency pair are you going to sell the Canadian dollar against? Have that ready to go. But what if the number comes out good? It comes out 50.8. Well, it's not as high as 51, but clearly above, right? Clearly above the 50.0 line, which is, good, very good, especially when you're nervous about it. So the Canadian dollar is strong. Good. What are you going to sell against a strong Canadian dollar? And have it ready to go. So I don't know. I'm not even going to think about it. But let's say if it's good for the Canadian dollar, you're going to long CAD yen or something, right? And if it's right or short Euro CAD, just CAD for the Canadian dollar, you know, DCAD long or something. Okay, just have it ready to go. Both charts up. News comes out. You get the results. You already know what to do and why, and you just go bang, got it. Using, you know, sound technical analysis, but you know what I mean? That's what I would do if I were me. Okay, ISM services. Interesting how it comes out after NFP. Okay, fine. The trend is good. Although there was a slowing, I think, in was it the service? No, it was the manufacturing. One of them had a slowing down in the employment subcomponent. So we might want to take a look at that more closely. So you're going to get the headline number is going to be fine. Do you think it really matters if it's 56.6 versus 56.9? I mean, how do they even really have the difference, right? What's the rounding error on that? Right, so anyways, I wouldn't worry about it. But you should open up the report. Yes, you're going to have to go to the website and read the report. Put in 5 minutes worth of work. I know it's too much to bear for some. But look at the ISM services employment subcomponent, and what they do is actually they do something really nice in the ISM report. They tell you the trend in the numbers and whether it's, you know, speeding up or slowing down, and they just tell you, right? They say the trend is up and it's increasing, right, at a faster rate and stuff. They just spell it out for you, right? I might not be a smart man, but I know what the ISM non-manufacturing employment subcomponent is. Right? Put it together, my friend. Be the smart money. Okay? What do you think? Should we worry about business confidence numbers or what? Nah, you know, we're so close. So retail sales, sure, that's important. Business confidence, right? So you got the Aussie and the Kiwi business confidence, fine. All of that's fine, except everybody is waiting for the RBA stuff. Okay, so this other stuff's going to be overshadowed. So you might get a spike of like 19 pips, and then it's just going to freeze up again. So you might as well just wait for the decision and the statement. So the decision, the big question is, are they going to cut interest rates to 2.0? Very, 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 very possible. I've actually read a lot of the speeches, not just the reports. Some of the speeches coming out of the RBA over the last few months. And I was chit-chatting with a reporter from Bloomberg about it. Like down the paragraphs after he says all the kind of the stuff you think, there's discussions about a worry about low interest rates creating a housing bubble like what happened in the US, right? And that's a real threat. That's a real threat. There's nowhere else to put your money if you're Australian except into your house, right? Interest rates are low, stock market's down, commodity prices down, just everything's down. But you can borrow a whole bunch of money for cheap. Plow it into real estate, which is still too high, right? So there's a real concern there. So they can cut, right? So that's fine. That 2.25 is the lowest it's ever been in the history of Australia. Right? When Captain Cook landed in Sydney Harbor in 1752, I don't know when he landed. You know, he set up the first central bank and said interest rates are 3.0. You know, I don't know. It's never been 2.25, right? So, anyways, that's a big deal. So if he cuts, big deal. And then the statement. Okay, the statement, what are we looking for? Are they going to just flat out say, we're not going to cut anymore because we're totally worried about real estate? He's never been that bold about it. You had to kind of read between the lines to get the worry part. But maybe this time they just say it. Then second of all, yeah, are they going to cut more, so on and so forth? And that's what we need, right? Are they going to say things like, the Aussie dollar is still overvalued against historic norms and all that kind of stuff? Is he going to blurt out something that says it's only worth 65? So this is a big event this week, okay, guys? For scalping, for long-term swings, for carry trades, lots of stuff going on with that report. By the way, did anybody Google when Captain Cook landed in Sydney Harbor? It's 1752. I don't know. That was my 1728. Thank you, Ken. Yeah, 1752. That's not bad for a Canadian, eh? 1728. How about that? Ooh, I might be pretty close. Yeah, I don't think he was an old man. Life was tough back then. So anyways, interesting. All right. Yeah. So there's that. What do you think? All this UK stuff coming up is going to be important. Keep an eye. If it spikes you can get yourself in the position, early for this stuff. Sorry, wow, I can't do two things at once. Let's go back. Okay, this is what I'm trying to say. If you can get a spike of the PI, sets you up for this. Okay, what I was trying to do is calculate, was it 2 days? 9:30. Yeah, it might be nice, if this swings you one way. I don't know. What I'm saying is you might. There's two ways. How about this? Let's try to speak in English. There's two ways to trade the news. One, you get into position 2 days before the actual release. Buy the rumor, sell the news type thing. And then the other one is make the trade, 5 minutes after the news is released. So one day is one strategy, 24 to 48 hours in advance, and the other one is 5 minutes after. He reached New Zealand. Oh wow, that's 1770, right? Well, there you go, 1770. Right? And what were interest rates, Ken? Not 2.25. That's the point, right? We're already at historic lows. Took them about a year and a half to even muster up enough nerve to cut, right? Oh, I think they're a long ways away from discovering gold. All right, so that's what I'm saying. So if PMI moves the market, it might move the market in a way that you like it. So let's say you wanted to buy the British pound because you thought this decision, the statement, somehow was going to slowly turn the British pound bullish again, because you're expecting maybe the IMF is going to help you do that, on the 16th. Which is only 10 days away. So now we're talking about a week before the IMF report, maybe you start building up your position. Do you understand? We talked about this a couple of weeks ago, maybe even a month ago. about if you were bullish on the British pound, what pieces need to come together for you to actually start buying, because right now it's bearish, 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 right? Well, maybe the IMF comes out with good numbers. Why do we know that? Because we pay attention to the MPC meeting minutes in the past. We know there is inflation there. We know Carney is conservative and he's saying, yeah. We know short-term inflation levels are low, but there is inflation there and things do look good. This is a guy that's very conservative. Okay? The numbers are horrible that coming out of the UK. And he's like, yeah, don't worry about it. Okay? So you're right, we got a lot going in there. So what if the IMF looks at it that way too? And what if the IMF comes out with positive with a positive outlook for the UK on the 16th? Okay, so we got that in place. So what if we get something positive out of the MPC again, which we kind of have been seeing? It's not necessarily positive, but they're downplaying the negative. So what if again they come out, downplay the negative a week before the IMF report, right? So when does this whole process maybe start to come together? PMI. And then what? Then this stuff comes out. And then what? Then next week, IMF. And all of a sudden, 2 weeks goes by and commitment of traders report looks like this on the pound. And everybody says, well, wow, the pound is strong. Where'd that come from? And the funny thing is, we talked about this a month ago. I was hoping this would be, so the original plan was 150 was going to hold because of the psych level. And then all this stuff would start coming together. Well, we were wrong on that, but I still think it's a valid thought process, which perhaps has the potential to manifest in real prices, right? So anyways, pay attention to the PMI. I don't think it's going to be a big deal. I think obviously the market's going to be set up here, but the PMI might be able to get you into, if you wanted to buy it, maybe you get a nice little support that you can purchase, and then you're front running this by 48 hours, or not quite 48 hours, 36 hours. And then this puts you in more profit. You're able to jam your stop and you feel real comfortable. A week later, IMF comes out, gives a positive thumbs up, and now you're up 300 pips, and it all started with a stupid, lousy, no good, stinking PMI services on April 7th. Right? May 1st, you have a 500 pip trade. Okay? And then you will cash out for profit, buy a box of Monte Cristo number 2s rolled in Cuba, and then send them to me as a thank you. Wink, wink, nudge, nudge. Aye, you know what I mean? Wink, wink, nudge. All right. From meeting minutes. Very nice. Why? Everyone wants to know, what is the FOMC thinking about? When are they going to raise interest rates? When are they going to raise interest rates? When are they going to raise interest rates? Is it going to be June? Will they raise interest rates in June? What about June? Now, I'm kind of making fun of the market, but that is what the market's like. You can't even get them to think as far as September, and I don't think they're going to raise in June or September, but the market is, in a frantic about it. Are you going to raise in June? What about June? Is it June? Are you going to raise in June? So we need to know what they're thinking, and this might be the most important release of meeting minutes in an extremely long time. In fact, someone might actually have to read them. See, most people just go to the newspaper the next day and figure out what some Reuters reporter that has no economics or finance degree makes $22,000 a year, and that person's going to write down what's in the meeting minutes, and investors that manage billion-dollar hedge funds are going to make the trades based on what that Reuters that 22-year-old Reuters reporter with a with what kind of deal would that guy have? I don't know. I'm sure it's a real nice one. Religious studies. Yeah. Ancient Greek art. Journalism? Yeah, sure, you'd think, right? So anyways, so I'm shocked how the world works that way, but I'm sorry to say it. Unfortunately, it seems like it has. But anyways, so maybe it's important enough where they'll actually read the meeting minutes, right? Instead of just reading them in the Wall Street Journal. So, cool. I think you should read this. Let's say it that way. I think maybe you'd read the meeting minutes. Okay? Are they going to raise in June, Sep, or Dece? All right, cool. So we'll get through that, and that's an afternoon trade. Lovely. It's also the par 3 tournament at Masters. We're going on to Thursday. Yeah. Big stuff. Aussie jobs. It's one of my favorite news events to scalp. So just think about all this stuff, right? And the statement, and then not long after, then we got the Aussie jobs report. I don't know. What do you think? Should you be trading Aussie this week? Hope so. See, some people just every day, Euro USD, Euro USD, Euro USD. Right? Like, really? So anyways, Aussie is going to be pretty good. And then we'll follow this up, right? So we got the Bank of England. So more British pound stuff, as we've already discussed. Interest rate decision, not a factor. Asset purchase facility, not a factor. Statement, that's what it's all about, Bubba. Is the economy better? Are they going to normalize? Okay, that kind of stuff. We're going to learn a lot on that. Then what? Lots and lots of CAD news. Building permits, it's going to be a bad number. Weekly jobless claims of the U.S. leaders. And then what? Chinese CPI. Do you think Chinese CPI is important? Should we be paying attention to inflation in China? Well, if you want them to introduce stimulus package, fiscal stimulus packages, if you want monetary policy easing, like an adjustment in the reserve requirement ratio, or actual change in interest rates, that would spur the Chinese economy. And who would that help? Australia and Canada. So this is just fuel for the fire. Give me fuel, give me fire, give me that which I desire. Right? Yeah, that's good stuff. UK industrial production, fine. We've already made our money by then. Right? We've already made our money by then. UK industrial production, whatever. It shouldn't be a factor. We're already in. We already got our stop jammed. We're already waiting for the 16th, right? Okay. And then, so CAD unemployment. Last week was U.S. unemployment, Aussie jobs and CAD jobs. Very nice. Very, very nice. It's a very good trading a week. Lots going on, guys. This is a nice trading week. Very, very good. Very, very good. I think it's going to be very interesting, very enjoyable. It's in a logical order. I don't think it's going to be volatile, like up, down, turn around kind of stuff. This just feels really good, right? Starting with ISM services, IVPMI. These are nice. These are just nice trades, right? And there's stuff that we can look at. So they offer short-term trading opportunities for a few pips, but on the longer term, they're also important, and that's really nice. And then we start building up, with the RBA stuff, and then the FOMC meeting minutes and Aussie jobs and the BOE stuff. And then right into more CAD with some Chinese Chinese inflation data. Just really nice. This is a really nice, enjoyable week, and I hope you make money. I guess there's no other way of saying it, right? Can I say that? Psst. Am I allowed to say that? Sure. Thumbs up. Yeah, I hope you make money. Greg says, do I trust the Chinese CPI? Whatever. It doesn't matter to me. It's just a number. It's just an event. Whether I trust it or not, not even, I don't have a concern about it. Whether it's true or not, again, not my job. Don't really care. It's the number that the market trades on. Good enough. That's it. Just puts me in a trade, takes me out of a trade. Any last questions? It's been 55 minutes, so we don't have much time. Any last questions? We did commitment of traders report. We did the event calendar. We did this, how to use PSAR to use volatility as your stop. Greg's going to go back. Yeah, that's cool. So yeah, if you're watching on YouTube, please give it a like or even comment. Like I've asked you before, what you really should do, I think, is in the comments section, leave a note for yourself about what you learned or what you thought was important. Right? I think leave a note for yourself. What did you learn? What did you take away? And that's that. Okay. Greg said, I did. I'm not lame. Cool. Well, we're going to have a very exciting week. We'll do a lot of technical analysis. So let's just cut today, and I'm already looking forward to tomorrow. Thank you for being a client of Traders Way. We appreciate that. Peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow.